Morning, Fractal Effects team. We're still watching the market from the morning. So please make sure you read the disclosure in the footer section of fractaleffects.com before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So again, today being PPI, we're just taking a look at oil. It's a little messy here as far as what we got marked up, because we're sitting inside of a daily fair value gap, and we got a 4-hour fair value gap on either side. So here's our first 4-hour fair value gap, this big purple box right down here. And then we have on top of that this 4-hour fair value gap that we're sitting in right here. That was left after the 9 o'clock candle, or sorry, I should say the 6 o'clock candle closed and the 10 o'clock candle opened. It left a 4-hour fair value gap, which we've tapped, and we're sitting at our DSD high. Now today's a bit of a tricky model. We have a downside expansion and a sell model, but we hit this 4-hour fair value gap. Remember, reversals happen when you hit these big higher time frame PD arrays. We had a double break to the upside. So this is one of those models where you either proceed with caution or don't trade at all. And today being PPI, there aren't too many other options. I'm not looking to trade any US related assets. So I'm going to wait to see if we get that retracement back here. So after a double break, now keep in mind we double broke right into a DSD high and right into a 4-hour fair value gap. And we've been consolidating for quite some time. So we could be getting a power of 3 here. The upside targets, there's a 15-minute fair value gap here, and then there's a 1-hour fair value gap right here, right above us. So what I want to see is a retracement, which we'll most likely get regardless. If we're going up, we're going to most likely get a decent retracement. Unless the market takes off without us, then there was no foothold. Then it doesn't matter. But either we get a retracement back into this zone, or it's going to reverse and punch right through and give us a bearish confirmation. So either way, that confirmation is what I'm waiting for. Wow, it gave us a confirmation and it closed right in that 1 second. So we have our bullish confirmation, and we have a double break to the upside. I want to see a retracement, and let's see how deep it retraces. During a retracement, I like to see at the very least one bearish fair value gap being created. That lets me know that it's retraced deep enough, and I want to use that bearish fair value gap as an inverse to climb back up. So it becomes another foothold. But we just consolidated here. So if you want to see this as a power of 3, then technically this would be the manipulation move up as it breaks down. And then we don't want to see the bottom of this break. We want to see a setup to go long. But if it just takes off from here, then again, there was no foothold. Remember, play the odds. There's an 80% chance after confirmation that we will retrace back into the range. I'm going to get rid of this 4-hour fair value gap just to clean things up here. That was the bottom of my manipulation range. Let's leave that. So here's a 15-minute fair value gap. Here's a 1 hour fair value gap. And there's the 1 hour high, that green line. Those are the targets. It could come all the way, obviously, into, there's your new day opening gap, along with the purple zone and previous day's high. Actually, sorry, that's Asia high, and that's previous day high. So there are a lot of targets to the upside, but again, there has to be a foothold. With a downside expansion model and a sell model, it has to give us a decent retracement, which it never did. So once it broke, we immediately had a double break. There was no retracement. There was no early retracement as far as the spotlight strategy is concerned. And since we hit a DSD high and a 4 hour fair value gap in here, I was actually waiting for a deep retracement to possibly even take out these lows and bounce off the DSD low again. But yeah, unless I see a decent retracement, I'm not interested. This becomes no different than a runaway market then. Can't climb a mountain without a foothold. And that's what you're essentially trying to do. If you jump in blindly without a retracement, because your retracement is your stop loss. Your retracement and then your 5M fair value gap, and then when you drop down to a 1M fair value gap, you want to see that same fractal model. That becomes your stop loss. Right now, we have no stop loss. Somebody blindly jumped in here. They could put a stop loss down here, but why there? Because the market could just sweep all the way down here and hit this NYC fair value gap. So if we run up into here without getting that retracement, I'm not sure if I'm even interested. Or we could get a deeper retracement later on in the afternoon, around 1 o'clock, 1:30, which is past our window of opportunity. So let's wait and see what happens. We'll be uploading some new educational material on our Instagram and TikTok. Both handles are fractal.effects. That's effects with an E and an S. So now we've tapped this 15-minute fair value gap. I've said this a million times. This has to look obvious. When you look at this, it has to be obvious that the market wants to go in a specific direction. Now you mix that with a proper foothold, and there's your play. If it doesn't look obvious, and you don't have a foothold, there's no point. And you're just blindly running into a house fire. Or there's a method to the madness, but there is a method. That's what you have to abide by. You can't just make small moves and your risk to reward has to make sense as well. There has to be room for growth. So not only do you need to find that foothold, there has to be enough space between that and the mountaintop. Otherwise, it's not a mountain. It's not worth climbing. Let's see if this 15M fair value gap triggers a reversal now, at least into our range, into our 20 EMA. I'd like to actually see it come all the way down to the 50 and into the NYC fair value gap. Just because you get a double break, I mentioned this before, double break means that's the dealer revealing their hand. It doesn't mean you can blindly jump in. People have done that. They see the double break, they jump in immediately. They think, you know what, even if the market retraces down here, it'll eventually come back up. And then you'll see the market do the biggest pullback all the way down here, and you're sitting in a massive drawdown, biting your nails, waiting for it, hoping for it to come back up. And it'll do it slowly and probably take the whole day. Do not put yourself through unnecessary stress. There's no point in that. This should be boring. This should be like watching paint dry. Wait for it. I'm sure you guys have all seen that study where they, I believe it was from either the 70s or 80s, where they gave kids a marshmallow and told them to hold off eating it, and if they waited about, I think it was 5-10 minutes, they would give them 2 marshmallows. That study proved that every kid who held off eating their marshmallow were more successful in life, made more money in life, or were more happier in life. Patience is a virtue. So we have a double break. We have a bullish confirmation. I want to see a proper retracement. I want to see a 5M bearish fair value gap created that we're going to use as our inverse. And then I want to see an immediate rebalance off of one of our key zones, be it the NYC fair value gap. There's a blue zone right here. And then I want to see a 5M bullish fair value gap created, tapped, and then a 1M bullish fair value gap created and tapped, and then a closure over the series of candles. That is the series that you have to wait for. Those are the rules. That each one of those has to be met. You got to tick them off. And if you don't see that, then you shouldn't be jumping in. I have users that will literally message. Some of them we met during a seminar, and they have part of another Telegram group that we're not really adding people to anymore. But I'll get messages directly from them. You know what? I jumped in because I thought it was going to do this. I thought it created the 5M, then it created the 1M, and then it tapped it. So I thought it was going to close over the series, so I jumped in. That's FOMO. That's your fear of missing out. That's why you jumped in. Here it goes. Statistically speaking, I told you, we're going to see a retracement. I want to see a 5M bearish fair value gap created. Remember, this is US oil we're looking at here on the left, and we're using Brent crude oil as our divergence. But I want to see a bearish fair value gap created first that we're going to use as an inverse foothold to climb up. And then I want to see it come into one of our zones here and an immediate rebalancing engulfing candle. And then a 5M bullish fair value gap created. So between the 5M bullish fair value gap and the 5M bearish inverse fair value gap, that's where we expect to climb this mountain from, and then into previous day high, into Asia high, to the new day opening gap. So don't let all these boxes confuse you. And I've painted them out here for my visual representation. That's what the actual indicator looks like when you remove all those. These are the only zones that are of interest. There's your DSD high. We bounced off of it. We got a bullish confirmation. Now we're going to retrace into one of our key zones. There's an 80% chance. Remember, we use probabilities. Over the last 20 years, this is the most back-tested strategy on the market. We have 20 years of aggregate on the back-end dashboard that will show you what this did over the last 20 years. And over the last 20 years, there's an 80% chance that it retraces back, at least to our 20 EMA, back into our range, and then that will set us up. And if it just keeps cutting through and breaks the bottom of this range, that's a false stay. We're not interested. So either it gives us our setup or it breaks the range. So either we get in or the dealer tells us, that it's going in the opposite direction. So here comes our retracement. As mentioned before, you don't get FOMO. There's no such thing as FOMO in this strategy. So I'm putting these back on just so I know where we're at. I'm going to get rid of this one, actually. This is a massive daily fair value gap. I'm even going to get rid of this 15. So this is a 1 hour. We'll use this as our target, the consequence encroachment midpoint. And then I have here, this red one is just a representation of the first 1M fair value gap that was created between the closure of the 6 a.m. 4-hour candle and the 10 a.m. 4-hour candle. So the first 1M fair value gap that was created between those two. That's just to let me know where the market is sitting on the higher time frame. About 44 seconds left. And then I want to see this next candle keep dropping and leave us a proper 5M fair value gap in here. So it looks like we've started the retracement portion. So I want to see it retrace. There's your blue zone, your 20 EMA. It could bounce off of either of these. I want to see if we get a deeper retracement though. I'd like to see it come all the way down here into the NYC fair value gap, into this blue zone, hit the 50 EMA. But let's see, because there's a 5M fair value gap in here as well. So now there's only two things we're looking for. I want to see this fair value gap stay open, which we're going to use as an inverse later. And then I want to see it hit one of our zones and give us a immediate rebalancing engulfing candle, bullish one. And then eventually our 5M bullish fair value gap. And then we'll drop down to a smaller time frame and look for our entry. But you got to go through each one of these steps. Otherwise, it could just continue to just take off from here, or it could just plummet from here. The reason we have those steps, it lets you know what the market is setting up to do. That's what we're trying to avoid. We're trying to avoid those immediate displacement candles that just shoot off in one direction. We had one, I believe it was Monday. Monday we were waiting for a bearish fair value gap to be created and used as a foothold, and it just plummeted. One massive displacement candle all the way to the bottom, taking out all the morning liquidity. It was a huge candle, and there was no news trigger. It just did it because it wanted to. Remember, the market is only doing one of two things. It's either taking liquidity or filling in inefficiencies. That's its lifeblood. This is an algorithm designed to do that. It is psychology and reverse psychology working at the same time. So it did not give us our 5M bearish fair value gap here. We're about 8 minutes away from 11. It did not touch our 20 EMA. And it's respecting this 5M fair value gap in here. But that's not enough for me. Not on a day like this. Not when you have a downside expansion model and a sell model. And you've hit the DSD high. Because if you look at the diverging pair, Brent crude oil, it can't break out of the DSD, the daily standard deviation high here, this box. So this is the weaker pair. So if we're going to go up, the weaker pair has to become the stronger pair. But no retracement has happened. We've retraced back into the zone, but on a day like this, I need more confirmation. I want to see that bearish fair value gap created first. Without that, I'm not satisfied. Because we've had no early retracement. We have not touched the 20 EMA since we've had the crossover. Crossover was here. So if it can't even touch the 20 EMA, either it's extremely bullish and just wants to take off without us, or it's gesticulating here for people to jump in. It's engineering new liquidity so then it can blow those orders, take out those stops, and then tap down here and then eventually move up. But yeah, no, on a day like this, I want to see a 5M bearish fair value gap. We have more than enough time in our window of opportunity. We have about 36 minutes left. But it's as easy as that. That's how our system works. We're not sitting here watching this market for hours on end. If we don't get that set up in our allotted time, then again, we're not interested. Yeah, none of this means anything to me right now. This bounce, for anybody who wants to take it based off of this 5M fair value gap, it's not enough confluence for me. At the very least, it has to touch the 20 EMA. There's our blue zone right here. Remember, these are highly algorithmic zones that the market is drawn to and pushes from. If we're going up, I want to first see a proper retracement with a 5M bearish fair value gap created, and then that immediate rebalance. Without that, I'm not interested. It's a waste of my time. It's a waste of your time. For anybody who's having a tough time figuring out day trading, maybe they've blown out more than a few accounts, tried to find a strategy that works for them. Given the fact that there is a myriad of strategies on the market, you have to ask yourself, what exactly are these strategies trying to do? Because there should not be a strategy. For example, if you're playing basketball, what's the goal? The goal is to get the ball in the net, right? Sure, there's ways of doing it, but you got to know what the goal is, inevitably. And a lot of these strategies, their goal is almost tied in with the steps of the strategy. And that's what makes no sense. That's almost like that's the same difference between a culture and a religion. And there are some places on this planet where your culture actually becomes your religion, or the other way around, your religion becomes your culture. But with us, we're following the format of the market, what the market is designed to do. Our strategy is just translating what that market is doing. That's it. We've created an AI market translator. That is our strategy. Our strategy is knowing what the market is doing and then just jumping in and heading in the direction. Can't even really call it a strategy. This is not a coincidence that we're held up right here at the DSD high. This is actually a huge reversal area. We've already taken out London highs. Right there, that blue line was London highs, giving us a visual representation of what's happening. Took out London highs. Now we're stuck at the DSD high. The diverging pair can't get past the consequence encroachment. So what's that telling us right now? That we are going to see a retracement, most likely. And it's in that retracement that we decide, are we going to, is it going to reverse and then head back up? Or is it going to keep plummeting? So if we blow out the other side of this range, we never jumped in. Capital preservation, right? That's our key. But if we hit our zone and then we set up, then we can get an entry, because we want to make sure our risk to reward makes sense. Let's say we get an entry down here. That's our target. I even bring it down to this green line here. That's the 1 hour high. And depending on where we enter, that retracement wick that we leave here as we get that immediate rebalancing candle, that becomes our stop loss. The retracement candle that wicks and gives us our immediate rebalance is our stop loss on the 5M time frame. And then we jump down to the 1M. We can even make it tighter and refine it. It makes sense here. It's a 5.33 R. Or, as mentioned before, it breaks right past our zone, meaning it wants to do an even deeper retracement to our 4 hour, in which case, as soon as it breaks this zone, that's it, we're done. We're not looking for a buy setup anymore. That becomes a false day. So either it's capital preservation and we save our money, we never take a trade, which is sometimes the best trades. The best trades are the ones you don't take. Or we get a reversal in this area and we possibly have an opportunity to make 5R. But again, I'm waiting for that retracement. None of this interests me. And our window of opportunity still has 28 minutes in it. That's how you avoid FOMO. You have to have an actual, and as mentioned before, I don't even want to call this a strategy. This is an AI translator. This is not an indicator. This is not a lagging indicator. This is a forward-thinking machine learning algorithm on the back end. There is a ridiculous amount of computation happening on this, on the front end of this, or sorry, on the back end of this, to project all of this information. The manipulation range, it shows you exactly what's going on. Without that, we wouldn't know that we had a double break to the upside, we have a bullish confirmation, and now we're just waiting for a proper retracement and an entry. But that's the only way you know that, when you have that visual representation. Each one of these zones was painted out before 8:30. Before 8:30, 1 hour before market open. You had a visual representation of exactly what was going to happen in the markets. There's your manipulation range. That green line right there, that's the manipulation range low, and your manipulation range high is right here. That's the green line right there. We can zoom in to show you. Right there. It painted that out for you. Meaning that whichever side breaks first is a manipulation. Unless it breaks twice to that side, then it's the dealer revealing their hand. Still waiting for that proper retracement. We hit the 20 EMA now. There is a blue zone here, so could punch past tap here, but and then if it sets us up with a 5, I'm still looking for a 5M bullish fair value gap regardless, but that's not going to give us much room for growth. If we get a bullish fair value gap above here, that's less than 1R. This is the lowest I want to see, at least it retraced to, and see what sets up here. But yeah, still waiting. It could technically take off from here, but this is not an area of interest for me. Not enough room for growth. And it could punch right past this and go up into here. But this is the low-hanging fruit. Remember, today is PPI day. CPI and PPI week. You got to proceed with caution. There's a reason why we're not looking at NAS or US 500. We do not look at US-related assets on CPI and PPI day. On CPI, PPI, FOMC, non-farm payroll, anytime Powell speaks, anytime Trump speaks, you do not want to be in the market or trading the indices or any Forex pairs that have the US dollar in it. A foreign pair, sure, that might be fine. Or an exotic pair, I think they call them. The longer we're paused here, the more I feel like they're going to drop this even deeper. But I want to see a proper 5M bearish fair value gap created first. That, to me, is a retracement. That is the definition of a retracement for me. But again, if it wants to take off here, it can. Be leaving without us. About 24 minutes left in our stream. I'd like to see, and this is very similar to what happened on Monday, by the way. On Monday, we were paused. Wouldn't really call this Now we're getting a bit of a power of 3 right here. You want to see at least 4 candles, 4 to 5 candles form to have a true power of 3. 1, 2, 3, 4. This is our 5th candle. We have 2 minutes 53 seconds left in it. Usually a consolidation leads to a continuation after a manipulation. So it would make sense if this thing just plummeted down. That would be the false move. It could give us our bearish fair value gap. It could meet a lot of requirements. But make sure you check us out on fractaleffects.com, where we teach high probability trading. We've just revamped a couple of the courses in our masterclass. One minute 30 seconds left in this candle. That'll become the 5th candle in the consolidation if it stays in the range. You always want to proceed with caution when you have a double break and a confirmation in the direction, or rather I should say the opposite direction of the models. Both the spotlight and the blue zone models are sell. We have a downside expansion model and a sell model. And the only thing that's actually working towards the bullish bias is our double break to the upside, our bullish confirmation, and the bounce off of this 4-hour fair value gap. Number fractals, you want to look and see what's happening on a higher time frame. On the higher time frame, the 4-hour candle bounced off this 4-hour fair value gap. We can take a quick look since we're not really moving here. Right there. So we bounced off this 4-hour fair value gap. I kind of isolated it, made it even tighter here. But we bounced off of that 4-hour fair value gap. And then this could be a continuation candle. And that's what we want to see. The 10 o'clock candle should be a continuation candle. You don't want the 10 o'clock candle to be the reversal candle. So here it was the 6 o'clock candle for us. The 6 o'clock 4-hour candle was the one that's swept out the overnight lows, tapped this 4-hour fair value gap, and now this could be a push up to take out the highs. That's what we'd like to see. We do not want to see a reversal happening. We don't want to be a part of a 10 o'clock reversal. Remember that. You'll see that model set up quite a few times. You want the 10 o'clock candle to be a continuation. Now we teach this in the masterclass, the higher time frame analysis. It's the same model you would use to swing trade on the 4-hour time frame, or look for an investment opportunity, etc. Or we give you guys the tools. You got to go in and do the analysis. Still waiting for that retracement. We do have our power of 3, so that's accumulation. Our next move could most likely be the false move. So after accumulation, you get the manipulation and then a distribution. Keep in mind the manipulation portion of the PO3 doesn't always have to happen, but we wait for it. and we line that up. We use that as confluence and line that up with the rest of the strategy. So right now I want to see a manipulation to the downside right into this zone. And the longer it takes, the more likely it's going to be big displacement candle. It could just be a 1, 2 candle displacement. Blow out everybody's stops here, and then set up for a 5M fair value gap. Could even sweep this low. But it doesn't mean I'm looking for a sell. Remember, we're high probability traders, 70% or higher. And right now, there's actually enough confluence going in both directions. It's dropped that 70 down to 50. We have a downside expansion model, we have a sell model. But on the other side of it, we've hit a 4-hour fair value gap, and we have a double break to the upside with the bullish confirmation. That's as 50-50 as you get. So I want to see a proper retracement back into this zone and a proper 5M bullish fair value gap created. That's our foothold to climb this mountain. Without that, we have nothing. Sorry if I sound like a broken record, but again, you have to reiterate this over and over. We actually created a video. I believe it's on our Instagram and it's on our YouTube channel as well. Take a look at it. It's about recording your own voice. Instead of having a list of entry rules, like I need to do this, I have to wait for this, I have to wait for this, just record your voice and listen to it early in the morning. It's literally your own voice reiterating everything. Wait for a retracement. Make sure there's a stop loss. That's how you prevent FOMO. When your own voice is telling you, hey, this never works out for you when you jump in. You always fail when you do this, and you always succeed when you do this. It's your own voice in the morning, pre-recorded on a loop, it just sticks instead of me going over a checklist of like, oh, this happened now. Okay, now this is the next move. This is the next move. This is the next move. I might miss something. Or if something changes, then I have to go back and go over that checklist again. But when it's your own voice on an audio loop playing on your computer, it just reiterates it. The point sticks. Listen to it enough times in the morning, and then you'll never need to listen to it again. It'll always just be there in your mind. But yes, still a whole bunch of consolidation. The power of 3 is still continuing. This is still accumulation. We have not had a manipulation or a distribution. And I've already painted out what I'd like to see. I'd like to see a drop. Take out these lows. Because if you look at the weaker pair, as you can see, Brent crude oil has already taken out these lows with this candle. Whereas US oil has not. About 15 minutes left in our stream. Our entry is always going to first show us a 5M fair value gap. There's not enough room for one to form here between where current price is and where our take profit is estimated at. So it doesn't even make sense here. Still the accumulation portion of the power of 3. And because we had a bigger range, where Asia's way up there, we're still technically, if you take the Fibonacci of that bigger range, there's the 61%. This is reversal territory. But usually a consolidation does usually lead to a continuation. after a manipulation. So let's see how deep it manipulates. Well, just pushed up without us. So if it hits this, that's it. We're done for the day. There you go. Didn't give us a foothold. No foothold. No retracement. Nothing of interest here. Capital preservation. That's our key. So we'll conclude the session there. Again, please check us out on fractaleffects.com. Our handles on Instagram and TikTok are fractal.effects. Turn on your notification, hit that subscribe button. We're live currently Tuesday, Wednesdays, and Thursdays. And we'll see you guys next week.